The higher this number, the more job openings there are and the more availability there is. So that's good. That's good news. Consumer confidence fell off a cliff, went from 97 to 94. We kind of anticipated that. And then here's where a lot of the data comes in. Like ADP was the last piece of payroll numbers we came in at. Their numbers were dismal. I don't know if you looked at it, but they forecast, or the last reading they had was plus 58,000. They revised it to a negative 3,000. Think of that. That's $60,000, 60,000 people reduction. And then this time they came out, they expected 50,000. It was a negative 32,000. So the jobs market there looked dismal. But like I said, we did have Goldsby. He's the Federal Reserve chairman in Chicago. He said they did an analysis, actually backloaded all the data they could find. And they came in today, and he just was on an interview in CNBC. He said their calculations had an unemployment rate at 4.3, exactly where we were in the past. I thought it was going to go up maybe a little bit to 4.4 with all the data that we had. This is my forecast, the economists, and where we were previously. And you check that right through here. These are my forecasts, the economists, and where we previously was. So if their number is right, that means the jobs market is stable. So again, let's look at it. We're driving down that highway blind. You're not going to stop. You're going to slow down. So now, what's the expectations of Federal Reserve cuts? Well, in 26 days, they're going to come out. There's still a 97% chance that the Federal Reserve is going to cut at the next meeting, and then in almost a 90% chance they're going to cut at the December meeting. Okay, so that's giving us this is what the markets are trading off as well. The Federal Reserve continuing to cut, that makes money cheaper for everybody. So that's that tendency.